All right, good afternoon. Welcome back here to Trader Money. Great to have you aboard. I'm jumping on just a little bit early here today. I have a follow up appointment for my wife here this afternoon, so I'll need to head to that. But we'll make challenge decisions here in about 10 minutes at the correct time. Run the final scan, see where things lie. But wanted to hop on and talk about a few things and do a quick rundown of the watch list. And this morning, I made a comment that the market and chop versus trend and all of that, and this kind of survived the chop, thrive in the trend theme of what the algorithm's about. And one of you asked me and said, "Hey, have you thought about incorporating some chop trades into the challenge?" And I sent back. I said, chop trades. What do you mean? Well, shorter term trades. Quick traders, those types of things. And it's one I said I would respond on video, but it's one of those things where you kind of have to ask yourself, what's your style? What do you like to do? I love quick chop trades. I love them. I love short little day trades. But I don't sit there every day looking for them. I don't sit there and try to find them. I don't wake up with the intent of, okay, what's today's trade? Never really have. When I see something, when it comes in, yeah. There have been a few times in my life where I've had to make some money and I've had to step in and say, all right, I got to get aggressive with a few of these, and I've done that. But for the most part, it's something that I did not spend a whole lot of time even trying to incorporate into the challenge and into the challenge algorithm. And for a couple reasons. And perhaps the biggest reason is the community experience. When doing chop trades, when doing short-term trades, the idea of having trades happen at 2 times a day has to go out the window. That can't happen. You can't do it, right? Because chop trades, short-term trades could change so quickly, and this idea of setting a trailing stop or stop level, it just doesn't work consistently, and even worse, with other people following along, where stops can get hunted and knocked on out. So a lot of the sound good type ideas with that just aren't really practical when it comes to applying. And so it would have to be something that that people would have to be aware of, hey, and be ready for a trade at any time during any trading day. And that is not the experience that I want Trader Minute to become or to be. So that takes some of the chop trade idea out of it immediately. But maybe more than that is the fact that, if we're doing shorter term trades like that, finding a consistent mechanism is a little bit tougher, right? It's doable, and there's some things I've shown in the past on doing it. But those things that I like and that are relatively consistent, there's no price stability. When the trades happen, there is zero price stability. So things blow through prices very quickly. So by the time I make the trade, send out the alert, and go, some of those prices can be 20 to 30% different. And when that happens, it creates a frustrating experience for the community base. And one where, well, now they're stuck with a decision. People are stuck with a decision. Well, do I chase it? Do I get in? What do I do? I'm in. I'm missing out. Right? It creates more frustrations than it does, positives. And the answer, okay, well, just do it live, and people have to watch it live and all of that. And great, and it is doable without those problems. But the whole reason behind trading is to create freedom. And, all that does is create a lot of headaches. And that is not my style. It's not something I'm going to incorporate into the challenge, for that reason. I'm happy to talk about some of the strategies that I employ from time to time. But most of the time when I'm trading, some of the chop, I'm not doing it on days like today. I'm not doing it when the market is flat and dragging and boring. And that's when most people want to trade chop because, well, trends aren't going, so they want to get into something, right? I tend to trade chop when the market's moving in a big way. The reward potential is just so much greater. So when the market starts to trade outside of its average two ranges, that's when I'll go in and be a little more aggressive, trading some of the chop. When the market's kind of just ho hum, not doing a heck of a whole lot, yeah, short. It'll open up and it'll move 10 points and then kind of hang out the rest of the day. That's not exactly a lot of chop to take advantage of there. So definitely not worth some of the downside elements there to it. With it. And so, yeah, that is a part of the challenge where, we're going to have days and, in times, and there are plenty so far, and there's going to be plenty more in the future where no trigger. Okay, one trigger, no trigger. Yep, one trigger. Great. That's kind of what it's designed to do. Not kind of, it is what it's designed to do. And, I know it kind of starts to feel a little long in the tooth after, 5 sessions with no triggers and possibly here this session with no triggers. But that is the nature of the market. The market moves and rests. And, sometimes it'll let us in, sometimes it won't with this. But the bottom line is that the algorithm provides that consistency and provides that kind of safety. It doesn't provide, your one-stop trading shop and a one-stop trading shop. Sorry, it doesn't provide a pick-a-minute. It's not a pick-em service or anything like that. It is about the challenge and the challenge execution and ultimately driving challenges to have substantial gains with the potential of 100 grand, always in play. And that's what we have here, and that's what we'll continue to run with. So, great question. Hopefully, that answers that, and my thoughts, around that there. Okay. All right. Also, want to go through and do a quick kind of watch list rundown. We do this about once a week. Just kind of take a look at where stocks are and if they're close and other things like that to, some sort of trigger. Here's Alcoa. This is an interesting one. I thought it was going to trigger to the downside yesterday. It didn't. And it was downgraded this morning and dropped. Has rebounded very nicely. This one's actually in a position where if it were to rebound and give a 3-7 crossover to the upside, it probably signals bullish, right? It would need to kind of hold this level, not make a new low. Makes a new low, takes that possibility out. But it does have that possibility coming in here for Alcoa. Alcoa's options, just aren't the greatest, but they're still tradable. American Airlines, I thought this had a chance of triggering here today. Does have a downside 3-7 crossover, pushing down below the 20-day moving average. Has a lower high, coming into play here with it. But consolidation risk on it is very high with American Airlines. I was a little surprised to see that, but nothing there yet. Could turn into something. Apple, we talked about this one this morning, had a downside 3-7 crossover, but not a signal, right? And that's what we're seeing with a lot of the downside 3-7 crossover action out there. It's just not signaling a downside trend is coming. And, it could be wrong, and it could, ultimately, we see the downside trade come. But a lot of it's just kind of like what we saw right here in Amazon, and, downside 3-7 action, and then just kind of hang out. And then, some of the upward trend continuing. We have a lot of this in tech, where they had the crossovers right back here in June. And, we played, what were the stocks we played back then? Visa and a few others, and did very well. But they haven't had a re-entry point along the way here. And that's, Amazon's and your Facebooks and your Microsofts and whatnot there, just haven't given it. Arconic, in a little bit of a pullback mode. Boeing, which I would love to trade, just still not there. Still not there. Doesn't have any sort of upside 3-7 action on it. To be a buyer of. Alibaba had the downside 3-7 crossover yesterday, but didn't trigger. Consolidation risk too high. Gap down this morning. It's pretty much rallied since. So just kind of hanging out. Bank of America. We played Bank of America right here on the crossover on the signal. Got knocked out on the consolidation here. It took, a decent gain. But, it's just kind of been chopping and consolidating here since, gap down today, push on higher, but no crossovers with the 3-7, so not very close. Bristol Myers, I mentioned this morning could be close, but it's not. The consolidation risk on it's very high. Caterpillar, a lot of charts kind of look like Caterpillar right now. Just this kind of rolling over action. And, it's very similar in terms of what the metrics look like to some of this action we saw in April, where some of these stocks they started to kind of just roll over a little bit, but it was more of a pullback, short-term pullback than a new downside trend coming into play. Chipotle triggered bullish, what was it, last week, and it's marched on higher, a little down here today, but it's a recent trigger. We were already loaded up in positions, and we had enough cash, and we went with Under Armour instead of Chipotle because of the option value. ConocoPhillips, this thing's had a lot of chop in here, has not triggered to the upside, has not triggered to the downside, the entire challenge, right? And you'll notice that Conoco really hasn't had any trend. It's had some big up days and down days, right? But it has not had, these trend, putting these trend elements on top of it. So it's just had a lot of chop since the challenge started. We've seen that with energy. CSX, speaking of a lot of chop, since the challenge started, the CSX price of the stock is just a little bit lower than where it was when the challenge started. Had this move right here, which was, not a trigger. We got a trigger right in here, but didn't materialize. And then, a lot of chop here since, and no real triggers emerging. Chevron, I thought, had a chance of triggering here today. Just hasn't been able to, like a lot of the oils. Delta finally seeing some sell, but nowhere close to a signal. Here with it, 3D. Again, this is coming off the watch list. I've been watching the options. They're just not tradable there with it. Disney, we're in Disney. We got a signal on it last week. Now it is 12:30 or 2:30 Eastern, so it's time to make some challenge decisions here. So let's go take a look at it, and then we'll jump back into the watch list. All right. So Disney here is sitting at 540 on the option, and Under Armour is sitting at, let's see here, at 263. So we have 540 and 263. I would love to hold Disney. Yeah, I would absolutely love to hold Disney, but it's at our time stop. And so I'm going to pull it off, and no other reason other than it's at its time stop. And what do we know about the time stop? What does hitting the time stop say? The time stop just simply says that the probability of trend is significantly less than what it was when it triggered. That's all it says. That's it. Doesn't mean Disney can't keep going higher. In fact, I fully expect that it will. But it's time to move on. Here from Disney. So I'm out at 540 here on Disney, and what we got in for 485. So we took a small gain. Nothing really to write home about there. Kind of a disappointing trade when I look at it. It really had some good potential, and it had a great setup, some good potential, started to go, and then just got caught in some of the market wash here, and was not able to get was not able to thrust on up. I wouldn't be surprised to see the stock up $4 tomorrow. Right, and it's just one where I love the candlestick action. I love the price action on the stock. I love the volume action. Everything, when it comes down to it. But none of that matters, right? None of that matters here when it comes down to it. So we take about a 12% gain, which, let's face it, that's not what the challenge is designed for. The challenge is not designed to grab 12% gains and bank gains and just bank small gains and go. It's not designed for that in any way, shape, or form. It is designed to kind of get in the explosive trades and the bigger movers, like what we had with GLD and Under Armour and, Boeing to a lesser degree there. But, we are running, this trade now puts us significantly under the run rate here for number of stocks that trigger and then move to average true ranges. So we are falling behind the run rates of what the data suggests, historically. But that said, we're still on good pace in terms of the gains and in terms of what the where the challenge is. So plus on one side, negative on the other side. So I'll take it. So that leaves us here with Under Armour and cash, and leaves us with 7,400 in cash, somewhere around there, 7,500 in cash. So significant level of cash to be able to employ and to deploy and put to work. Now there are no new triggers here this afternoon, that's just where it is. So no cash to deploy right here. All right, so that's the challenge. The challenge change being made right here. Again, the Disney exit has nothing to do with the Fed tomorrow. Has nothing to do with any of that. Has everything to do, with just the time stop and running with the mechanics of the challenge, which we will continue to do. Okay, so trade closed. There we go. Let me make sure that's marked correctly there, and off and go. Okay. All right, back to the watch list here. Disney said what we're going to say about that. EOG Resources, this is one that's just been in a lot of chop. Got a little bit of uptick here in June, but nothing serious. Had this downtick, but did not trigger bearish. Just kind of like most energy names, just really, the energy names have not given good trend signals, right? Then there's Facebook, which is kind of like Amazon. Where it just, had the 3-7 cross back here in June. We were trading other things at the time. And even if we had gotten into Facebook, we wouldn't be in it still. Has not given a re-entry point. But this, to me, is one of the scariest charts. If you're bearish on the market, Facebook, Amazon, they are some of the scariest charts out there because nobody's really talking about them all that much. And they're just coasting to new highs. And, this market, as it's hit new highs, we have had more stocks participating in hitting new highs than any new high that's been set in the last several years. And normally we see that. When we see that, the market has significantly higher to go. And so, these stocks like a Facebook, like an Amazon, definitely not what short sellers we want to see. We finally see FCX give up a little bit here today. This has been one that just is, kind of chopped a lot here since earnings, but, nowhere close to triggering, a trend there. FedEx, I would love to get into for the challenge on the bear side, but FedEx did not get the 3-7 upside crossover to give us a 3-7 downside crossover, so it just doesn't have the trigger mechanics. Gold, where I stand with gold. I stand in the same spot I stood with gold on this day, and when we talked about it on this day, that, for me to jump back into gold, I need to see at least a retracement. Yes, it's going to have up days, going to have down days, and some chop, but that's what I expect from gold. I expect chop here from gold. Now, going into the Fed tomorrow, or Bernanke's comments, we could see a pretty sizable move in gold. And, this is a chart where the way it's kind of playing out, we could actually see it set a bearish signal. If that happens, we'll go out and play it. But with Barrick, which is holding up better than the price of gold, we've seen the miners outperform. So, that tends to be bullish for all parties involved. Halliburton, which has just been stuck at 23, just can't get above it, can't get below it. Just since this, kind of 2-day bump, really just stuck there at 23. No trend. Home Depot, same type of thing. Here with it, just nothing there. Honeywell kind of just looks like Apple, right? And I'm watching charts like Honeywell and going, all right, come on, cross down. Cross down. Give us a downside crossover. Let's go. That way, the upside at least can be traded if and when it happens. But Honeywell has earnings upcoming here. IBM, same type of thing here with that. And you can see it's trading at the high side of its range. This is not a trend signal right here. This is just a little pullback going on here with it. Intel, same thing. Just a lot of these charts, JD.com, same thing. Like an Alibaba, like an Apple. J&J, a little bit different. We saw a bullish trigger right back here. What was it, 3-4 days ago? And then it dropped the next day, gapped down the next, rallied, tried to hold a gain here today, but really has not materialized from that signal. And nowhere close to setting a signal right now. Juniper got a downgrade. That dropped it, but nowhere close to a trend signal. Banks, J.P. Morgan, just like Bank of America. Coca-Cola falling here on Pepsi earnings, but very high consolidation risk on that one. Vegas Sands, some big option volume in Vegas Sands here today, and mostly bullish. And, it's a very nice setup here when it comes to Las Vegas Sands to the upside. But, no fresh 3-7 crossover means no dice for the challenge. Same with MGM. Triple M, we talked about this one this morning, but, nowhere close to a signal there. Altria, this is one where it's not, when I ran the scan just about 10 minutes ago, was not signaling because the 3-7 hadn't crossed down. But it is one where the consolidation risk is relatively low. So we could actually see this one trigger tomorrow morning, but we'll see where that lies. Microsoft just sitting up here near the highs, had one down day, one up day, and just been sitting here doing nothing. Micron has, since its earnings, got the nice earnings move and has pushed on higher, but no fresh 3-7 crosses to, even give us a trigger. Netflix here pushed into a new high this morning. Coming off of that just a little bit, but, it has earnings upcoming here soon. The options are pretty expensive there with it. Nike, which had a 3-7 crossover right back here, didn't signal and hasn't signaled as it's gone higher, but we did get the signal out of Under Armour and are currently sitting in Under Armour and playing that. Pepsi earnings here today. Pepsi earnings suggest what? They suggest that Pepsi is expensive. And that's nothing new. Pepsi was expensive at $120. Pepsi was expensive at $110. Pepsi's definitely expensive at $130, and that isn't going to change. And the stock could drop $20, and it's still going to be expensive there for it. And it could rally another 10, still be expensive. But it has been, a very big safe haven for some hedge funds out there, and I'm very curious to see how they react to the earnings. Whether they use that in the coming days to say, hey, you know what, we're going to sell it. But Procter & Gamble, just chopping around, no signal there. Raytheon, which is off the watch list, so moving on from that one. Schlumberger, just like most of the other oil, though, Halliburton's been stuck at a price level for the last 3 weeks. Schlumberger's at least, gradually, pushed on higher, back up to the 40 mark. The S&P just kind of looks like a lot of the other charts, out there. Then we have AT&T, which, nowhere close to a signal. We have Target, nowhere close. Twilio, which set a signal last week and is running here with the signal. We have, Twitter, no signal came in on the crossover right back here because it was coming off of lows. But beautiful day for it here today. But no fresh crossover there. Under Armour, about 20 cents here today. We're running with that, currently sitting in that and riding that. UPS, downside crossover on it here today. But not a trend signal, just kind of like FedEx there. Visa has just continued to just grind higher. This is a stock makes a new high every single quarter since its IPO, and making a new high again here today, and it'll probably make new highs up into the $250, $300 range, as it continues to go. It's one of the absolute best stories in the market, and a story that isn't affected by trade war, a story that's not really affected economically, a story that's not affected by, debt levels. It's that perfect cross between technology and finance, and it's a way that a lot of fund managers are getting their financial exposure without having to buy banks. And it just continues to be phenomenal. But we had the signal right back here that we traded, and haven't had a new signal come in here since. We have Valero, which I was watching earlier this morning. As this is one that could give a bullish signal. It's actually in a position to possibly do that, but doesn't have the 3-7 crossover action going on it right now. Vulcan pretty muted, and then Verizon downgraded here today as the fresh 3-7 downside cross on it, but high consolidation risk on it. Walgreens, which triggered just before earnings, gapped up nicely on earnings, just kind of been pushing on slightly higher since then. Whirlpool, like everything else. Walmart, just been on a tear, but has not had any fresh crossovers there on it. And then U.S. Steel, which had a monster down day yesterday, but this is one that had the downside cross at the beginning of the month, but didn't trigger, and but it has continue to push lower. So you'll notice, there's not a lot that's really all that close to a brand new trigger, right? We've had some consolidation and some shakeout, but we don't really have a lot that's, super close to a new trigger. A few stocks, right? We could definitely see 2 or 3 triggers come in at any moment. But, it's not like the whole watch list is poised in a position where, man, if the market goes up a little tomorrow, everything's going to trigger bullish. Or if the market goes down a little tomorrow, everything's going to trigger bearish. And what should that tell us? Well, yeah, that tomorrow's not going to be the be-all, end-all of the stock market. Right, just like the China-U.S. trade talk, or at the G20 between U.S. president and Chinese premier, just like that wasn't the be-all, end-all to the market. The Fed tomorrow is not going to be the be-all, end-all to the market. Things will continue to tick, and opportunities will continue to present themselves, and as they do, we'll go out and trade them here for the challenge. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow morning. Take care.